Financial success can be defined in many different ways depending on who you speak to. Maybe it means owning a fancy car and a big house. Maybe it means being able to save X amount of dollars each paycheck and affording to eat takeout multiple times per week. Maybe it means becoming truly debt-free. Whatever your definition of financial success is, the path to getting there isn't all that different. I'm a 28-year-old CPA living and working in New York City, and I've built a $300,000 net worth in 5 years while sticking religiously to what I'm about to outline for you. Before I get into the guide, I want to lay down a quick disclaimer. This is not a get-rich-quick guide. Becoming financially successful takes a special kind of person that encompasses a level of dedication and consistency that most people do not have. However, if you follow this guide, I can guarantee you long-term financial success and stability. Enough of my yapping, let's get into it. Education and skills. You would think the first step to financial success would be earning an income, which most people would argue is the most important factor to building wealth. I would tend to agree. However, earning an adequate income in today's inflated economy without specialized education or skills can be virtually impossible. I encourage you to go look at the various entry-level job listings demanding a college degree, 2+ years of related work experience, and mandatory skill sets with hundreds of applicants. Today, everything is so competitive that a 4-year degree doesn't cut it anymore. Hell, even the trades have been getting flooded with new talent due to the disruption AI has had on the entry-level white-collar job market. Skills or tangible experience in addition to your degree or education is mandatory. So if you are in high school, start trying to understand what interests you and get hands-on experience. While doing this, build a catalog of projects or skills developed during your experimentation. To all my college students, the time is now to begin hustling. You need to know how to utilize different softwares and/or build physical projects to gain real-world experience to showcase on your resume. This can include anything from AI automation, proficiency in Excel, or tangible projects related to your field of study. Some examples of tangible projects can include building a physical product from scratch or even helping a small business solve a real-world problem. I know many of you are studying a range of different fields, so I can't get too much into the specifics, but I can't emphasize enough how important education and skill building are for building that foundation for financial success. Your first job and debt management. Congratulations. After developing yourself and your skills, you finally landed your first job out of college or trade school. Now what? Well, you're probably going to want to buy that brand new car you've been dreaming about your whole life. Wrong. You're going to be doing the same exact thing I previously told you, continuing to build upon your skills, except you're going to be making an income that you'll be saving, paying off debt, and investing. More on investing at a later part. Most people in your position get excited about the newfound income being made and rush to make any and every purchase they originally couldn't have made in the past. But this is a surefire way to waste your most important wealth building years of your life. These introductory years to the real world are where you are learning and aggressively paying off debt. Most people incur some sort of post-high school education-related loans in the United States. The amounts range drastically, but I've seen some of my friends rack up at least $200,000 in student loans. However the size of your student loan mountain, it's likely you are paying a high interest rate for it. Now, this loan is probably going to be your biggest source of debt at your age, assuming you don't buy a brand new car off the lot after graduation. Pay this off aggressively. This means paying well above the minimum, throwing whatever you can afford at it. There's a couple reasons for this. The longer you hold that principal balance on the loan, the longer you are paying the interest. You are quite literally burning money by holding this debt. Not to mention the hidden cost of not being able to invest that money instead. Let's say you're 22 years old and your student loans have an annual interest payment of 6%, to be conservative. You're not only losing money by paying this interest, you're losing out on the S&P 500's historical annual return of 10% if you were to invest that money instead. So, by holding this debt, your earnings are effectively being eaten away by interest, inflation, and missed investing opportunities. Peace of mind. Being 28 and debt-free is something most people in their 20s can't relate to. And let me tell you, going to bed at night knowing that if I got laid off, I won't have to worry as much about paying my bills is a blissful feeling you can't experience without actually being in that position. With no debt, your opportunities are endless. You can afford to take that risk on leaving your current job for a more risky one that may have better experience. You can afford to save and invest for a house and retirement. You can actually feel like you're getting ahead with every day that passes. So I can't stress enough how important it is to pay off your debts as soon as possible. In addition to paying off your debts, you're going to be focusing on what skills in your current job you can develop and bring to a new company. Because let's be honest, the best way to increase your earnings early on is by job hopping. And the best way to job hop is by developing relevant skills. This means constantly researching dream job postings and aligning your current job responsibilities with your dream job responsibilities. You may go through multiple job hops, picking up different skills that ultimately align you to be the perfect candidate for your dream job. This is how you need to move, intentionally and methodically. I worked at one of the world's largest public accounting firms right after college, where I developed skills that would be an essential foundation for the remainder of my career. However, it wasn't my dream job. And there were more areas of accounting I wanted to explore before understanding where I wanted to dig my feet in the sand. So, after 2 years, I left for another job that exposed me to a different side of accounting. But I was only able to get this job through the relevant experience I had at my previous company. After 2 years, I jumped companies again for the same reasons. Each jump was followed by a 20% pay increase. At this point, I understand which area in accounting I want to pursue long term. But this was only possible due to the skills I developed at each job that allowed me to diversify myself professionally. So, while pay is important, it's not always the most important thing to focus on early in your career. Take it slow, develop yourself, and the money will come. Investing. Now for the exciting part. Or maybe not, depending on what you expected. I'm sure you've seen people online claiming to make a lot of money in the stock market. Or maybe you have a friend who was always talking about the latest big winner he had. Either way, this isn't reality. Most people only announce their winnings but never mention their losses. In reality, the overwhelming majority of stock traders lose money. This is due to many reasons that can have its own separate video, but the point of this is to tell you the importance of investing. If not, inflation will eat your savings away faster than you'll realize. The only thing most people should be investing in is low-cost, broad market ETFs. What are those? Exchange-traded funds are simply a basket of particular companies packaged into one stock that you can purchase. It essentially diversifies your investment for you in different ways. Whether you want a broad basket ETF of all US companies, or if you want a tech-only focused ETF filled with the top tech companies, there's an ETF for every investor. For example, the Vanguard Total US Stock Market ETF, or ticker symbol VTI, is an ETF that encompasses a variety of different large, medium, and small public companies across many industries into one tradable stock. VTI is essentially the best way someone can safely get exposed to the stock market without knowing anything about investing. So, when you are finally ready to start investing your extra cash, it's best that you research which ETF is right for your risk tolerance and start dollar cost averaging. Maybe you're also wondering what dollar cost averaging is. Well, simply put, it's repeated buying of a certain stock in fixed intervals, regardless of market fluctuations. This is a set it and forget it type of investing strategy that has been utilized for years and years. Setting it and forgetting it is probably the most important aspect to investing, since it is highly emotional to the average person. Before you start investing, you need to understand that the overall market has peaks and valleys throughout time. If you are overly emotional about your investments, you might be tempted to sell when the market hits a downturn. Or, on the other hand, you may overinvest during all-time highs that could leave you chasing your gains over a bear market. Most investors recommend a frequent, steady, long-term investing strategy due to the 10% average yearly gains that the stock market has returned within the past 30 years. So, if you stay level-headed while investing in the broad US stock market, you are bound to protect your hard-earned money from inevitable inflation. Remember, financial success does not happen overnight for 99% of people. It is achieved through planning, commitment, and ruthless consistency. You deserve a life where money is not a stressor. You deserve a life where you can retire one day. You deserve a life that works for you and not you for it. Let me know in the comments any other tips you may have for somebody trying to be financially successful, as I'm sure there are plenty that I did not touch on. I'd love to hear from you guys. I'll catch you in the next one.